Today is Wednesday, October 17th, 2018. It's 7 p.m. Eastern Time. I'm Mark Dannenberg. I'm the founder and CEO of Options Moneymaker, and this is the Options Moneymaker Q&A session. Aaron Rumley is also here tonight, along with Michael Kastner. Hey guys, how are you doing?
Hi, Mark.
Hey,
I think.
Hey, Mark. Good afternoon. Good evening.
Yeah.
Thank you.
So, for those of you who may not have attended one of our Q&A sessions before, I just want to give you a really quick overview of what the purpose of this is. We teach many traders the basic strategies to trade options successfully. And more recently, in the last couple of months, we've also introduced futures trading. Now, we recognize that no matter how comprehensive we design our programs to be, our instructional programs and the learning that we provide, no matter how thorough we think it is, anytime you're learning something new, there are always questions. There's just something that perhaps in your learning style, you need to ask a clarifying question. There's something that perhaps it's so second nature to us that we didn't dig into it deep enough. We recognize that. And so the way we design our educational services and programs is knowing that there's an opportunity every 2 weeks in this Wednesday evening session to have an opportunity to ask questions. And then, of course, those of you who participate in our live trading room throughout the day, you can ask questions anytime you want throughout the day. But the programs and services that we are supporting here are our Freedom 5 program. That's our long-term growth program. Our live trading room, it's our active trading environment for people who have either a lot of time to trade, they want to focus on trading throughout the day, and they'd like to follow along with trades that we help them identify. And then our SPX Profit Optimizer service, which is really designed for people who do not have a lot of time to trade, but they're interested in participating in the options trading market. And it's a roughly 15-minute session. Sometimes it can last a little bit longer than that. But it's a 15-minute session at the beginning of the market day where we identify a single position to either buy to open a put or buy to open a call on the S&P 500, and then we are out of that position that day. In most cases, we're out of that position within the same 15-minute, first 15 minutes of the market day. So we have a variety of opportunities for option traders to participate in trading, whether it be they have a small amount of time, Profit Optimizer, or they have an extensive amount of time where they want to be much more active in our live trading room. And then our core education programs, which are Profit Builder Plus, which is really teaching the basics of options trading. It's teaching about credit spreads and debit spreads. It's teaching about how to recognize an entry signal. And then we do provide some alerts with the Profit Builder Plus program. The alerts are not intended to be the entirety of your trading. They are intended to be a reinforcement of the strategies that you learned. And then Aaron does a market review every day and talks about where the charts are showing that we might be headed. If we do have a position that we've alerted, she talks about that position, how that position is developing, how it's unfolding, and what types of things to consider. So it's really a very comprehensive way to be able to immerse yourself in learning how to trade options. And then more recently, in the last couple of months, we've introduced futures trading. And we don't do any type of alert with futures trading because it's much more rapid fire trading, but we cover it extensively in our live trading room sessions. So both options and futures are discussed in the live trading room. So our collective mission, Aaron, Michael, and myself, is to teach, help you learn what you have decided that you want to participate in, motivate you to really move forward with your learning, and then inspire you with the stories that we share with you, the success that we share with you, that many of our other traders are experiencing, and lots of those comments come in through the live trading room where people are sharing a particular trade that they took and how much profit they took on that trade. Some of those comments are a particular trade they took and it didn't work out for them, but something that they learned, some key takeaway that they learned from that, which is just helping them become a stronger, more skilled, and knowledgeable trader. So I'm going to turn this over to all of you. Our mission tonight is to help you understand a little bit more, respond to any questions that you might have, and happy to discuss anything regarding futures trading or options trading that relates to what we teach and what we trade.
So the first question we have is from Bob. Bob is asking regarding AO to AO. Do you enter the trade as soon as the color changes, or do you wait for the bar to close?
So AO to AO, for those of you who are not futures traders and don't understand, and by the way, AO to AO happens to be an entry and exit strategy that options traders can use also. That's why it's really a pretty powerful and profound approach to trading. The simple answer to your question, Bob, is you enter the trade on an AO to AO as soon as the color prints. So as soon as the AO prints red, you're going to go short, or as soon as the AO prints green, you're going to go long. You do not wait for the bar to completely print. One of the things that we have found in all of our trading and all of the research that we did before we actually released the futures trading program here a couple of months ago is that a very high percentage of the time, and I don't have an exact number for that, Bob, but a very, very high percentage of the time, the entry when the bar starts to print ends up being very close to the high of that bar when you're going short, or the low of that bar when you're going long. So you want to take advantage of the immediate entry. Now that doesn't always happen, but a very high percentage of the time it does. And you want to take advantage of that entry as soon as you possibly can. So one of the things that Aaron has been gracious to work on for us is building a tracking format that we are in the very near future going to start publishing and have on our website so that you can see what the AO to AO results are. So I'm just going to give you a really rough format of this. This may not end up being the final format. It's still a work in progress, but the numbers are correct. So it's really more the formatting of it than anything else. Just taking your question, Bob, on AO to AO and the entry at the first print of the color, if you take a look at where we are October month to date, and this assumes that each position, each AO to AO cycle is opened, each trade is opened when the color starts to print. Month to date, we're averaging almost 72 points a day. Total number of points month to date is 791 points. Now, if you're not familiar with futures trading yet, folks, you might not have participated in the futures trading. We're talking about NQ, which is the NASDAQ 100 futures, and 791 points. Each point is equal to $20. So each point is $20 of profit. So on one contract, we're talking about month to date, average daily average of about $1,438 on a single contract. And of course, that's all scalable depending on the size of your account. If it was 10 contracts, you know, 14,380. Now that's about a half of a month. If I go back to September, the average points per day was just over 33 points. So a little different between September and October, and I think if you've been trading at all, you realize, along with us, that October has been a much more volatile month, but still, even on a lower volatility month, you can be averaging about $663 a day per contract, and that's against $500 of risk per trade that gets recycled from trade to trade. And so, by the way, these numbers are through Friday of last week. They're all updated through the full week of last week. They do not include this week yet, but this week's numbers are not that much different so far. So we're talking about an average daily profit of about 47 points, a little over 47 points. So 50 points on NQ is $1,000 of profit a day. So we're probably averaging about $900, a little over $900 a day in terms of average daily profit. That's based on a single contract. So I think that's pretty compelling, and Aaron's working on the formatting of this, and hopefully in the next couple of weeks, or by the time we close October, the first part of November, we ought to be posting something on the website so that you can take a look at what the pure AO to AO performance looks like.
Mark, excuse me, Jacqueline's asking, would you please discuss the reasoning for the Freedom 5 SPX put position?
So I want to show a chart for that. Here, let me, I'm going to switch screens here, folks.
So Jacqueline, while he's pulling up the chart, this was also covered in Profit Builder. I'm going to assume you're not a Profit Builder client as I talked through the reasoning behind this, but Mark and I were evaluating technical signals. And he'll show you what we're looking at here that give us the opportunity to take advantage of a strong movement. In fact, there was a CNBC article out today talking about how we may not be done with this move lower, and the second move lower could happen much quicker than the first move that we saw that took us to the most recent low, which I believe was around 27.10 on SPX.
Yeah, so Aaron and I had a pretty lengthy discussion about that entry, that put entry. And I'm going to, you can see my screen okay, guys, right?
Yes, I can see.
Yes, sir, fine.
Okay. I'm going to look at a 30-minute chart. So we use a lot of the same foundational signals that we're using in our live trading room trading, that we're using in our futures trading, in our AO to AO trading. The foundation of that is the same, but the biggest difference is that we need to be aware of the fact that with this trading, with the Freedom 5, we need to send an alert out, and people need to have time to respond. People need to have time to open up their trading platform, need to have time to open the trade. So there's a dynamic in there that is not part of our live trading room trading or our SPX profit optimizer trading or our just our regular futures trading. And this year has been a challenge with that level of dynamic, using the same signals, using the same types of indicators. In our live trading room and profit optimizer and futures trading, what you saw with the futures trading has been since we released the futures program. Live trading room, we're taking profits almost every day. Because it's very rapid fire, very quick, very responsive. This is a little bit different dynamic, but we need to go to a longer time period in order to be able to kind of ride the longer wave. So here's what we saw. I'm on a 30-minute SPX chart. Now, we alerted yesterday an SPX put We went out of the money. We went quite a ways out of the money to the 2600 put. One of the reasons that we did that is because the cost of options has increased significantly in the last couple of weeks with an increase in volatility. So we're working with the capital that we have available. And so we went out of the money. We ended up going to something that had about a 12 delta. So it still will generate some profit for us if we have a reasonable movement. And what we saw is that our stochastics was at the top of the range, and we were looking as though it was starting to roll over. Now, that is one of the first indications of a potential move lower. The second thing we saw on the 30-minute chart, and I rely pretty heavily on Michael and Aaron in this because they are pretty expert when it comes to Elliott Wave, but if you're not familiar with Elliott Wave, I'm not going to try to teach it here tonight, but basically the 1, 2, 3, 4 that you see in these green boxes is a marking of what is looking to be a 5-wave pattern. Now, Elliott Wave is usually presented in a 5-wave pattern. So in this case, you have a 1-wave down, you have a 2-wave up, you had a pretty strong 3-wave down, and we're pulling up into a 4-wave. And there were some things that were telling us that we could be close to the end of a 4-wave. That doesn't guarantee that we are. But after a 4-wave, if this wave count is correct, and there is a high probability that it is reasonably close, but if it's correct, that means that the next wave down, when the 4 is done, would be a 5-wave. And the 5-wave, this is not guaranteed, but the 5-wave will generally move down below the low of the 3-wave. And the low of the 3-wave printed at 2710.51. Now we closed today at, what did we close at? 2809. So we've got about 100 points of room to move down if this wave count is correct. So that's the 30-minute chart. And then we look at other time periods. We looked at the 60-minute chart just to see if there was a consensus. Certainly have the same wave count. That was a good indication that we're on the right track here. And we had a stochastics at the top of the range starting to cross over. We didn't have red AO agreeing yet, but that will take a little bit more time on the longer time periods. And so then I backed up to the 10-minute chart looking for the signal, the trigger that I wanted to use in order to actually pull the trigger and open the position. And we opened that position sometime around 3:30, I think, yesterday. Let me just go back here. 4:30. So we were evaluating this around 3 o'clock-ish, and about 3:30, you know, leading into 3:30, between 3 and 3:30, we saw a crossover of stochastics to the downside as well as a red AO. So as long as our primary time periods, the 30-minute and the 60-minute, were showing a wave count that implies that we should move lower, then we timed the entry and the alert of that position based on the 10-minute. There are a couple of questions out here about Freedom 5. There's no doubt about it, folks. Freedom 5 has not succeeded yet so far this year. There's certainly some people who believe that it will not succeed, but you know, I don't necessarily believe that yet. This is a program that runs at a minimum through 12/31 of this year, and we're going to see what happens. If we get any kind of a more significant movement with significant spikes in volatility, then we're going to possibly see some recovery of Freedom 5. So we'll provide an update when I feel it is appropriate, when there's something more significant to update, but until then, we're going to be very selective about the trades. This particular trade that we took today, at one point today, we had about a $3 profit on the trade, which was about $300. With the wave counts, the way we are seeing them, as I mentioned, we decided just to hold the position. We've got a month to expiration on this position. We may end up taking it off for a profit and looking for another position to enter into, or we may hold this position for a while longer.
Michael, do you know the answer to Randy's question? What's causing the colors of the bars? Any signal?
Well, Randy, are you asking about the price bars, or are you asking about the AO?
Price bars.
Yeah, the price bars are, declining pricing versus neutral, the pricing relative to open, high, low, close, and the blue bars are increasing volume pricing. Michael, if you want to add anything to that.
That's right.
He's asking if it's the get XTL. I believe it is. I know that I have get XTL on my charts, and I know that they adjust the colors of the bars just from the normal green and red. I don't know, Michael, if you can weigh in at all.
That's without looking inside the program that Mark's got, I can't answer that. I don't know what that's what it looks like to me that's turned on. So yes.
Okay. I'm going to pop back over to my other screen here. I don't see any other questions out there. I just want to emphasize a couple things. There obviously everybody gravitates to what's not working. Freedom 5 has not worked this year. Not trying to put a favorable spin on that at all. It's not worked yet so far. Now, it is a 5-year program, and I fully intend to still drive towards the 5-year goal that I have. But obviously, we put a performance guarantee out there for the first year. So we'll see where we stand at the end of this year as of the last trading day of the year. But I want to also focus on, if you're a well-rounded trader, if you're participating in each part of this trading, Freedom 5, if you're following along with the alerts, hasn't worked out very well for you. If you're trading AO to AO performance in futures, or even using AO to AO for your options trading, you ought to be doing very well on that. And we emphasized that considerably for the first month after we released the futures trading, how powerful the AO to AO performance is. And we're going to, as I said, be posting this. But another thing that I think is really important to pay attention to is every morning Michael and Aaron host the Profit Optimizer service, which is just the 15-minute service. And so again, if you're a well-rounded trader, if you're participating in each aspect, if you have your own type of diversification in terms of the types of strategies and the approach, very short-term, which is futures, very short-term, which is Profit Optimizer, and then the long-term, which is Freedom 5, if you take those 3 programs, 2 of the 3 programs are doing extremely well. October month to date for Profit Optimizer, with the maximum risk that has been put on any one single day being $2,080. We're up about halfway through the month. We're up 71%, up $1,480. On a year-to-date basis, we're actually, even though we've had 3 losing months, that's just a natural part of trading, we're actually up $5,770, which is 275%. So this is a strategy where we promote using a very limited amount of capital on each trade. $2,000 is what we focus on, but of course you can trade whatever you want. And so on a maximum amount of capital risk, we've squeaked over that $2,000 a few times. So on a maximum amount of capital risk being $2,100, we're up $5,770 year to date. It's 275%. So that's my view of having some diversification and some balance between what you do. And it can be very frustrating for a trader to have one particular service that they follow, or even 1 week's worth of trading, or even a day worth of trading that just doesn't work out. You get really discouraged and you get frustrated. Those are some of the things that are very important for you to work through and just set aside as a trader. You've got to look at the big picture. You've got to look at what your total month is. You've got to look at what your total performance is across each of the types of trading that you're doing. But what we're trying to do is to provide levels of service that allow you to participate in both short-term and long-term. Now, as I already said, Freedom 5 being the long-term hasn't really worked out very well so far this year. And also that doesn't mean it won't by the end of the year. Options trades, I mean, we have examples all the time. Michael will call me and say, hey, you know that options trade that we got into on Profit Optimizer this morning, we took $1 or $1.50 a profit. Well, it went to $20 a profit. You don't need a lot of those types of trades to recover a fairly healthy drawdown on a particular service. And I'm not saying that's going to happen, folks, with Freedom 5. I'm just saying I am not one to watch a football game or a baseball game and declare the team that's behind the losers until the game is over. And I'm not one to declare any type of final performance on Freedom 5 or any of the services that we offer until we have a conclusion, you know, some line in the sand that we've drawn that says we have concluded. So just kind of want to share that perspective with you about the overall performance of the 3. Actually going to take off October. We normally don't post in the summary until the close of the month, but I put it in there tonight so you could see.
I was going to say you're messing up my formula there.
I just, you know, I knew you were going to give me grief about it, which is why I just undid it. I didn't even override it, Aaron.
I appreciate that.
I'm afraid of you, Aaron.
Mark, Anthony's asking, do you think, have you thought about doing an in-depth video training on the AO to AO training?
Anthony, while I was enjoying myself by the pool, I thought a lot about it, and I've got a lot of notes about it, and it's really just kind of putting some time together to make that happen.
And Ken's also asking, or I think make a statement to, basically, I think he's making a statement, to have only one methodology that isn't working out of the ones you have that do is pretty good average. Like you said, it's not working now, but you're tweaking it. I know it'll be successful eventually. Thanks, Ken. Appreciate that.
Hey,
and you know, Ken,
go ahead, Michael.
And Mark, Ken, you're in the room every day. You hear me talking about the option trades. You know, sometimes the futures trades, well, if the future trade is going to work, the option trade is going to work too. But we had a gentleman today, I can't remember his name to save my life, but he had taken 8 option trades, because I always tell at the beginning of the day, if I take an option trade, I'd go out till Friday's expiration or whatever expiration I suggest. it's just a suggestion. And then I would be right now, because of volatility, I might go a couple strikes out, and that's about a 40 delta. So you get a point move in the option. It should be about 40 cents. We've been getting more than a point move. We got a 6-point move this afternoon right before I left. This afternoon worked out really well, and somebody shared with me that they were up fairly good, fairly nice in the option trades today. So it works both ways. Just because we talk about futures, but I always mention about the options too, and it does work. But like you said, that's a great comment, Ken. I appreciate that.
Yeah, Ken, I appreciate that perspective also, because if you're going to be committed to be a full-time trader like Michael and Aaron and I are, then you have to understand that sometimes you take on some approach, some strategy that doesn't work out as well as you had hoped. It doesn't mean that you just abandon everything. It doesn't mean you throw in the towel and go, I can't live with this. That's all an emotional reaction, and it's all based on a very negative story that you tell yourself. But if you work yourself through some of those failures, some of those things that didn't work out pretty well as you wanted them to, then you get yourself aligned with a set of variables that will hopefully help you and allow you to be profitable. We are evaluating those all the time because the market is dynamic and the market is changing and adjusting all the time. First part of the year, we were really doing quite well on a great run rate on Freedom 5. I've been reading many stories recently. They don't make major headline news, but many stories about hedge funds and fund managers who have just closed up their funds because they just can't make money anymore in their traditional methods of trading, whether it be options trading or traditional stock trading. They're just really struggling. Now, if you took a step back and you were relatively naive about this, and you go, well, how can that possibly be? I mean, look, the market's been on a tear since March of 2009 for all practical purposes. It has been in a bull market since March of 2009. Well, the dynamics of the market and the fluctuation in pricing and options and the intraday cycles that exist every single day, no matter what the overall trend is, and the ability to really isolate a core set of technical variables that allow you to take advantage of that and ride it for a particular profit. That's been the challenge for a lot of these money managers and bigger hedge funds, where they've just divested themselves of their fund and they've returned all of their money to investors because they just can't make money. So we've struggled a little bit with Freedom 5, but I also want to make a really strong point here and hope that every one of you has followed our guidance. With Profit Optimizer, we have always recommended no more than a $2,000 risk. We use the same $2,000 every day. Some days we win, some days we lose, but fortunately we win far more days than we lose, so the overall growth of the account continues to grow. That is extremely important because if you continue to compound your investment and then you have a losing day, you can very easily give everything back. So we promote a conservative approach, so $2,000. So theoretically, the most you could ever lose would be $2,000, which in my opinion is a very reasonable amount for a trader to risk. Then in our futures trading, where we're using our AO to AO signals, we're using our stochastics and our awesome oscillator. One contract of risk on the S&P 500 or the NASDAQ 100 is $500. So $500 of risk allows you to participate in a method that could potentially earn you, if we look at September and October, an average of just under $1,000 a day. that again is an excellent risk to reward opportunity. And then even with Freedom 5, when we launched Freedom 5, we weren't suggesting that you have $100,000 that you're trading. We're suggesting $10,000. Now, $10,000 obviously is more than we're doing in Profit Optimizer, but we needed something a little bit more robust to start with in order to drive towards the goal that we have. And so you came to Freedom 5, hopefully, following the guidance that we provided, not risking more than $10,000, but being willing to risk $10,000. So if you got halfway through the year and you're disappointed and you've lost a couple $3,000, whatever your loss was, and you're really upset about that, then you never should have participated in the first place. Because if you come to a trading program that says we are willing to risk $10,000, we don't want to lose that, and we're going to work real hard not to lose that. But you have to have the mindset that that is money that you could potentially lose. And if you do lose that, that's just part of your trading. And hopefully you've participated in other paths, other strategies, other avenues for trading that have offset that and given you an overall positive outcome. So just kind of want to share that perspective with you because I think it's really important that every single trader own their accountability for the amount of risk that they put on, and they accept that that amount of money is actually at risk and can be lost. So that's my 5 cents worth, not 2 cents.
Andrew is asking, with the increased volatility, are you still recommending using the 10-point plus 2 plus slippage stop for NQ? So
Andrew, that is a number that we suggested as a guideline to newer futures traders to kind of keep you out of, feeling as though you're a deer in the headlights, you took a bigger loss. We actually have, if you follow AO to AO, we actually have a maximum drawdown of 52 points. Now, you may not want to take that on. So what we suggest is the what you just stated, the 10-point plus 2 plus the slippage. I think that's a very reasonable amount. That's not a pure AO to AO, but if that's what you can manage and that's what you're comfortable with, 10 points on NQ would be $200 of risk on a single contract. And so if you feel as though you're willing to absorb $400 of potential risk on a single trade, that could either be 2 contracts or it could be 20 points. So the guidance that we provided on the 10 points plus the slippage was to provide some sort of a reasonable protective stop for newer futures traders so that you don't get into trouble and you don't get discouraged by having a bigger loss. Now, I see that the maximum drawdown for October is 52 points. And when Aaron was putting all this together and we kind of acknowledged that that's what it was, that trade, if you had a 52-point drawdown, would be about $1,080. That might not be something you want to absorb. And if it is not something you want to absorb, you want to use a smaller protective stop. If it's something you can absorb, I can't guarantee that that's going to be the maximum drawdown. But if that's something you can absorb, just recognize that even including a 52-point drawdown on a single position, we're averaging almost 72 points a day of positive gains. That's the average over the course of the first half of October. So even with a 52-point drawdown on a single position, we've got a profit average of about $1,400 per contract.
Matthew's asking, can you explain the significance of retracements? Well, And the wave count, if you're talking about Elliott wave, it's huge. I mean, if we get around the 382 retracement and then it breaks that, then we get the 618 retracement, we start seeing green AOs going back the other way. Well, of course, we're going to be in anyway, but that just, to me, gives me a lot more confidence that we're going to rally back to the upside or to the downside. It depends on which, you're looking at, or if the retracement is. Go ahead, Mark. Were you going to say something?
Well, let's show a visual. It's a little easier to understand if you can see. So I'm just going to stay on this 30-minute chart, Michael.
Okay.
And we're going to put a Fibonacci retracement. And the most common Fibonacci retracement will be if you identify a wave pattern, come off of the top of the 2-wave down to the bottom of the 3-wave, for example.
Mm-hmm.
And so what Michael was just talking about was the 382 retracement. That's a very common retracement. What it means is that the movement down from the 2-wave to the 3-wave will retrace itself and move back higher. And there are some predefined values that historically are very consistent. So 382 is very consistent. And if it doesn't stop at 382, it's not at all uncommon for it to go to a 618 retracement. And you're going to find, I mean, for me, it's kind of exciting. Michael and I used to talk about this all the time. We'd be in a pattern, we'd be in a trade, and the price would come right up to 382 retracement and then move back lower and then take out the bottom of the 3-wave.
Right.
So for me, the significance, Matthew, is that the 382 is a place where if there are other technical signals telling me that maybe it's time for us to turn and head lower, that's just one more variable. It's not guaranteed, but it's one more variable that could very likely indicate that we're done with a movement to the upside. Anything else on that, Michael?
No, sir. That's good. Thank you. A lot easier to see for sure.
Alan is asking, I'm fairly new, what is the AO to AO?
Very, very simply, Alan, if you look at a 5-minute chart, which is what we pretty much pay attention to, the awesome oscillator is this indicator down below here with the red and green bars. AO to AO is when you have a red bar come on and you would open a short position. So you go short and you would hold that position until a green bar prints, and then you would close that position. If you have a green bar come on, you'd open that position by going long or buying a call or going long on a futures contract, and then you would hold that position until the next red bar prints. Now, it's not that simple. I mean, that is basically the AO to AO, but there's a dynamic in the relationship between stochastics and the AO that helps us determine when to enter. But that's really what it is. AO to AO is saying get in at the opening of this green bar, which today opened at 27.85, and close it on the opening of the red bar, which is 28.11. So nice profit to the upside, and then you'd be short right here. So that's what that is.
Alan, it was taught with futures, but it can be used with futures and with options trading.
Yeah, I think that's really one of the important parts of this, that the technical signals that we taught with the futures course are not futures exclusive. If you wanted to buy a put, here when the bar turns red and close that put when it turns green, some of those trades are going to be losing trades, but the majority of them are winning trades. It's what we talked about on our 72 points daily average for the month of October so far. When you have a green bar, you can go long on a futures contract, or you could buy a call on an options contract, and then you would close that options contract when the first red bar prints, or you would flatten your futures trade when the first red bar prints.
Marquette's asking, have you ever heard of the NQX? I have heard of it, but we don't trade it, so I don't really give it a lot of thought, Marquette, but I know what it is, but we don't trade it. So
I looked at it. The volume is 0 on almost every at the money option in the
yes.
near future expirations. So that can be a little bit difficult getting in and out of trades.
And Aaron, thank you for mentioning that, because there's many indexes out there that just don't have the volume. I mean, even though the NQ moves extremely well, the S&P has more volume per contract than the ES than the NQ. So you have to be cautious of that.
Michael's asking, did the 52-point drawdown occur on a high volatility day? Because otherwise the AO cycle would be over before 52-point drawdown. So the performance that Mark is showing is, and we don't recommend this, is with an assumption that you're not using any sort of protective stop. We wanted to test to see what the absolute maximum drawdown would be if you used no stop whatsoever. So you're correct. If you were using a protective stop, if you had a 10 or a 20-point stop, you'd definitely have been stopped out of that trade. Whether it occurred on a high volatility day, I don't know, it occurred on October 11th. You could check if that was a high volatility day. Most of October has been high volatility. The interesting thing with that day, with that 52-point drawdown day, is that day was recorded, that trade, as a 51.5-point loss. That day ended up 68 points. So these are we're looking at these numbers here. If you had used a stop, you'd been up higher than that, because you would have been stopped out for your 10 or your 20 points, whatever your comfort level is, and then waited for that next entry point. But even with that loss, or that max drawdown day, it was still a positive AO to AO day, up 68 points on 11 trades.
Thanks, Aaron.
I think it's really important to understand too that the AO to AO strategy, it's a strategy by itself without any other caveats. So it can be risky to not have a protective stop out there, which is why I think that most of you, especially if you're just starting out, you ought to have a 10-point or 20-point protective stop, just kind of as this, catch-all if something dramatic happened. But pure AO to AO is an opportunity to trade based on history, and we're starting to share with you the history. And as I said, we're going to post this on the website. And even with that 52-point drawdown, as Aaron mentioned, the day was a positive day. And overall, what you should be looking for as a trader is an opportunity to have profits in the big picture. If you get upset because Tuesday you lost money and you gave back what you made on Monday, then you're not seeing the big picture and you need to adjust your strategy. If you're very, very finitely focused and, I'm just going to take $100 of profit on this and then I'm going to quit for the day, and then tomorrow I lose 300 because that's the way it worked out, I don't think that's an effective way to trade. I don't think you're going to win. I don't think you're going to succeed in the long run doing that. You have to adopt some sort of an overall big picture view. So, for example, if you wanted to trade AO to AO, and you know that over the course of September and October, the average is 50 points a day, well, maybe you take a pause, you hit the pause button when you hit 50 points in the day, or you have some sort of an arbitrary number that gives you a little wiggle room to give back. I don't want to take small profits on Monday, Tuesday, and Wednesday and then give back because I picked one trade that didn't work out on Thursday. So the whole purpose of the AO to AO is to give you a very, very simplistic approach that historically demonstrates a very profound profit. Now, here's the reality, and Michael and Aaron and I chat about this frequently. I think personally that AO to AO is the simplest entry-exit strategy set of rules you could ever find in trading. It is absolutely, in my opinion, the simplest. It is also one of the most challenging if you are hunkering down over your position throughout the entire trade, because here's what can happen. On an AO to AO trade, you can have a 20-point profit, but the cycle has not closed yet, meaning if you're short and you have 20 points of profit, you don't have a green AO yet, you haven't closed the position. And there are some of those trades that will reverse, and you end up closing the cycle for a loss. That's part of the game, but that is very mentally taxing, and it is a challenge. So when I say this is one of the most simplistic approaches you could ever trade, it is. How hard is it to follow stochastics in the AO, red to green, green to red, etc., blah, 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 crossovers on stochastics? Not hard at all. Anybody could learn to do that. What is difficult is when you have a single trade where it showed you a profit. Well, Aaron had one today, up about 20 points or so, 25 points, and then it reversed all the way to negative. And then it reversed back again and ends up closing overall for a very nice profit of about 25 points. That cycle movement and that range can really mess with your psychological stability in terms of trading. But logically, then, when you look at results, and I'm not even saying look at our results and follow those, I've been saying since we launched the futures program to trade in a simulated platform for 1, 2, 3 months, the AO to AO, so that you know exactly what to expect. If I knew that I could absorb a 52-point drawdown and still be up $1,400 per contract per day on an average over the course of October, it'd be a lot easier for me to stomach those more challenging trades. So that's why we talk about AO to AO, but it's also why we talk about inserting manual stops and locking in a profit. And of course, if you want to trade AO to AO, you're not doing anything wrong by not being a pure AO to AO trader, meaning just strictly holding red to green and green to red. But you get 20 points or 10 points or whatever you're comfortable with, and you want to lock it in and take the profit and then wait for the next cycle, there's nothing wrong with that either. Aaron, how many cycles do we average a day? About 12 or so?
Yeah, 12
About
per
12?
day for October.
Okay. So if you think about this, folks, all we're trying to do is to guide you to a place where you can feel very relaxed with your trading, be profitable with your trading, and not feel stress. AO at AO is extremely simple, but it can be stressful because you feel like you just gave back something on this trade. But think about it this way. If you average 12 cycles a day, 12 cycles a day, that's 12 cycles where it starts red, closes green, or starts green and closes red. And each cycle gave you 4 to 5 points. Maybe not the big wins like we have on some of the cycles, maybe not the 20, 30, 40. If each cycle gave you that, then you are earning somewhere around 50 points a day. And 50 points a day is $1,000 on a single contract on NQ. So there are some variables in the way you slice the AO to AO, but the point we are making, the point Michael makes and Aaron emphasizes in the live trading room, is that the AO to AO strategy should be one of your core strategies, and we will help you figure out how to make it work for you, whether you insert manual stops, whether you just ride the whole AO to AO and rely on the averages or whatever it is. But I personally believe it's the most powerful profit-making strategy I've ever worked with in 35 years of trading.
And just to tag on with what Mark was saying, that 52 max drawdown of trade, two things about it. That was the first trade of the day. So that can mentally be draining on you. But you have to set that aside, especially when you see, if you're testing on your own, or if you see our results that we're showing you and that we'll be posting soon, that it averages out to 71 points per day. But that first trade of the day could have been closed if you knew where the low was going to be, or the max profit on the trade, for a 38-point profit. So these are the things that Mark and I are talking about. You can have that profit and it can go against you. So you can choose how you want to trade that AO to AO. If you see a 38-point profit, I know I'd be putting in some sort of protective stop to lock that profit in. But this performance tracking is just doing a simple no think about it AO to AO. And it's averaging that 71, almost 72 points per day.
Aaron, how many trades a day did you say average? I apologize, 12?
Yeah, yep, it's on the spreadsheet.
Okay, so I'm going to put it in perspective because I see it every day in the live trading room. We talk about it every single day in the live trading room, which is fantastic. Just give you an example. At 7:10 today, we went from green to red right when we started this. Mark, we talked about this afternoon. I don't know the percentages, maybe you do, Aaron, but when you get a new cycle to start, you're going to have some kind of gap. It might be 10 points, it might be 6, it might be 12. But this one was 7 points. It moved down 7 points. So that's $140. If you stop right there, say, okay, I'm happy with that, and you do that 12 times a day, well, there's your $1,200 right there, plus by just that one trade, and take it off and wait to the next cycle. You can do that, but you got to me, like Mark said, it goes both ways. Can you stomach it pulling back, or can you stomach it going lower? Because this went lower. I mean, that first move put you in at 95, and it went down to 88. Now from 95, now it's down at 70. Now it's down at 78. It went to the 78 low. So that's almost 20 points. Can you stomach that? So you got to make your mind up. What's your goal? And I'm going right into Bob's question here, but what's your goal? Is your goal to make as much as you make, or is your goal to say, okay, I get to 500, I'm stopping for the day. I'm going to stop. That's something personally you have to figure out yourself. Right, Mark?
Well, yeah, that's something everybody has to figure out for themselves. I'm not a big fan of the stopping for the day, but unless you have other things to do, or you're pretty comfortable with where you're at overall. But I don't know if the next trade is going to be, the one that's going to offset a drawdown I'm going to have the next day. So drawing a line in the sand and having a hard stop in terms of a profit, that works for that day, and you just have to look at that with your eyes wide open, because the whole idea of stopping at 300, 500, whatever, $1,000 for the day is, I don't want to give it back today, I don't want to screw it up later, I don't want to take a bad trade. But you could just do that the next day. That's the whole thing about that. But what Michael and I are talking about is that some of the variable nature of trading for each individual trader. I personally like the idea of stopping for the day and going on about your business. Go play a round of golf. Go do something else. Go out on your boat. Go have fun with your kids or grandkids. That's the reason I like it. But if I'm committed to trading for the day, I'm going to trade throughout the day.
Anthony's asking, does the AO to AO take stochastics into account? Absolutely. It's just like it.
Yeah. Go ahead, Michael.
Anthony, I know you're very familiar with Abel trend. It's the same thing. if it's not heading in the direction that the stochastic, that the AO is telling you to go, you just don't need to go. Bottom line, it needs to be
Anthony, we call it AO to AO, but it assumes that the stochastics is aligned with the entry. If we had a green bar to go long, but stochastics was pointed down, we're not going to start that trade. That cycle would begin as soon as stochastics agrees with the direction of the AO. One other comment I'll make about AO to AO is because there are variables, about how you can do it. Aaron made a really good point. It's just as simple as it could possibly be to just trade AO to AO. For the purposes of mental health, we use
whole
manual.
Nother story.
What's that, Aaron?
It's a whole nother story.
That's right. But we use manual stops because we feel relieved, we feel good, we feel successful. We can celebrate when we lock in a profit of whatever it might be, even though there might end up being more profit. Another aspect of that is if I opened a new cycle trade, Michael makes a very valid point that a large percentage of the trades have an immediate pop right at the beginning of the cycle, whether a pop lower or pop to the upside. If I lock in my profit, my initial profit, whatever I'm comfortable with, and that's the value of using a trailing stop, which we taught about, I can still continue to participate in the AO to AO cycle by using my 30-second chart or my 1-minute chart if you don't have access to a 30-second to re-enter the cycle. So if I was short on an AO cycle and I've already closed out, I've taken a 7-point profit, then I would be waiting for my 30-second or 1-minute chart stochastics to be at the top of the range and rolling over, crossing over with red AO to re-enter the cycle, the same AO to AO cycle. So you can take multiple trades, they're called continuation trades. You can take multiple trades on the AO cycle. Generally, you're not going to make as much as you would if you just held, but you're going to have much greater peace of mind by doing that.
Matthew is asking, is the drawdown average for NQ still less than 10 points 80% of the time? I don't know about 80% of the time, but I just use my spreadsheet to just do a simple average of the max drawdown, and it's around 11 points.
You can, for SPX, we initially talked about a $200 stop, protective stop, just like on NDX. So it's a different point set for SPX, but it's the same dollar value.
Aaron, Jerry's asking, when the optimizer trade is profitable, how often does it hit the 30% mark?
I don't have a percentage on that, but we do mark on the SPX Profit Optimizer spreadsheet a P or an L next to each trade. P means that it hit the 30% profit, and L means that it hit a 30% stop. I don't have a percent profitable on once the trade is profitable, how often does it hit 30%, but those are out there for you to view. It will tell you exactly each trade, if it hit the stop or if it hit the profit target of that 30% bracket order.
Hey, Jerry, you can go through and review that month by month online, and you'll see the number of times. I mean, if you want to come up with a percentage, you certainly could do that, but you see the number of times that the trade would have lost. Like this is a trade that we took $300 of profit on in August. If we'd let it go, we would have lost 30%. So that was the manual. This is a trade where we took $250 of profit, and if we'd let it go, we would have had a 30% profit. instead of only 11.9%.
That's the one I told Heron we need to hold.
No, I'm pretty sure I told you that we needed to hold that one.
Okay.
I think I told you both we should hold.
We should have held the other one that went to 54 or something. I don't remember.
That's right. We should have.
Randy is asking, during the live trading room, do you say this is an AO entry point and then an exit point, or does the individual need to figure it out for themselves? Except for the occasional times where Michael steps away or I step away while we're hosting, we're calling out those AO changes because of the chart that we're monitoring. We have a little countdown clock going down, and Michael will say, okay, 10 seconds, we'll know what the next bar is, and if it's green and the stochastics are pointed the right way, I'm going long. And so we have that set up there. And then if Michael's doing a manual exit, he'll call out where he's putting his stop in at, and then as that cycle starts to change, again, when it changes, we're usually looking for an entry to go to the other direction. So we're calling out AOs quite frequently in the live trading room.
Bob's asking on an AO to AO on the NQ, do you set a 10-point stop? And also when you get stopped out, when do you re-enter?
So there are different levels for that, Bob. If you're trading pure AO to AO, you're typically not using a 10-point stop. You're going to use a much wider stop, because with AO to AO, for all practical purposes, I don't want to get stopped out. I want to hold the trade and work the averages that I know are real based on history. But a practical stop, I think, and Aaron just said that the average maximum drawdown is about 11 points. I think a practical stop is 20 points. And now you have to figure out whether or not you're comfortable with that in your account. But I think a practical stop is 20. Frankly, you know, for most of you, I think if it goes to 50 points, you don't want to be in that trade. You'd rather take yourself out and look for a different point to enter. But when do you re-enter? We talked about that in the training, in the futures training. We talked about 30-second re-entries and 1-minute re-entries.
And then David's asking, suppose you had a green bar to go long and the 5-minute stochastics were pointed up, but the 1-minute stochastics while pointed up were above 90. This is a trade opening signal, not a continuation situation. Would you consider the 1-minute stochastics and wait to open? No, I wouldn't, because for the AO to AO, if you're trading AO to AO, that's what the strategy you're asking about is. If you're trading AO to AO, to me, at no point trading AO to AO did I take into account where the 1-minute stochastic was. And I didn't even take into account where 5-minute stochastics was. That meant if 5 minutes was above 90 and I got my first green AO and stochastics are pointed higher, I'm going long. So these results are not taking into account at what point stochastics is in the range. It's if the stochastics and AO are aligned. Now, you could use that for your own personal trading if that would make you feel more comfortable. Now, generally, if it's above 90%, we would expect to see some sort of reversal, but there has been plenty of times that Michael and I have been sitting there and it's at 90% and we just keep going higher. So the AO to AO tracking does not take that into account.
Angela has a great question. And
yes,
it came up quite a bit during the training, the futures training. And the question is, do you follow the signals on NDX, which is the cash index, or on NQ, which is the futures? Now, NQ is a derivative of the cash index. So theoretically, it follows right along. But we find frequently that the charts are out of sync. One is delayed behind the other. And so in the results that we're posting for AO to AO, they are based on waiting for an alignment between both the NQ and NDX signal. So if NQ shows a green bar with stochastics pointing to the upside, but NDX does not yet show a green bar, we don't take the trade. We're waiting for a consensus. And thanks to Erin, she really identified that as a refinement of the rules and the pattern, that we're much better off waiting. And there are some days, if you traded NQ, you're going to be better off than you are on NDX. And there are other days, if you follow the signals on NDX, you're going to be better off. But by waiting, it's kind of the best of both worlds, and you get a nice solid entry.
That's exactly what I found. So I tested, which was a little bit difficult to monitor all these at the same time, but I tested following just NQ, following just NDX, and then following them only when they're aligned. And it's not always that NQ is more profitable than NDX. It's kind of a coin flip every day. And if you get the wrong side of that coin flip, you could have a losing day where following NDX and NQ alignment would end up with a positive day. What I found is that usually following the NDX NQ alignment gets you in the middle between the two and ends up being a more conservative approach and a more overall profitable approach.
George asking, is the AO more or less similar to the Williams oscillator and behaves just about the same? It's the same. As long as you use the 534 settings, it don't matter where you put what the AO is at, what platform you use. We've got folks that use different, probably 4 or 5 different platforms, and that question was asked this week, what settings I had, and then the gentleman told me that his is exactly the same, a totally different charting package. So yeah, it's 534 is what we use.
Matthew, I will tell you in my experience, Matthew's asking if someone's trading after regular market hours to adjust any part of the AO to AO strategy. In my experience, the answer is no. AO to AO, one of the reasons I think it's a very powerful strategy is it works during regular market hours, it works outside of regular market hours, and it's not unique to just NDX and Q. It's not unique to just ES, the S&P 500 futures. It can be used for any of the futures contracts that can be traded out there. I know Michael trades bonds frequently. We have people in the room who trade the Dow. So that's really what makes it a very powerful approach, very powerful strategy.
Greg is asking, do you feel that AO to AO trading works in a low volatility market with VIX below 15 or even 12?
September it did. That's when the volatility was really low, down around 11, 10, 11 range, 12.
Well, I think what you're asking is, see, do you feel that it works in a, oh, I'm sorry. I misread the question. I thought you were asking if it worked better in a low volatility market. Yeah, but Michael's right. It worked very well in September. A lower daily average than October, but
yes,
that's fine.
That's still a great daily average.
Yeah, you want to take $600 a day off of $500 of risk per trade?
Just following changing colors? Okay.
Mm-hmm. It's the simplest thing you can do, Erin.
Forget about the mentality behind it.
Michael's pulling his hair out.
Huh.
It's hard if you want to trade AO to AO, just purely AO to AO, based on what our performance is, I would highly encourage you to sim trade. You will be surprised how even at virtually trading, it is hard to trade AO to AO mentally when you see that profit there.
Oh, I've had more than one in the live trading room tell me this is intense, even though I'm sim trading.
Right.
It is, because I mean, you know, I preach that. Don't actually put yourself that it's real trading going on. It's real money, and then don't open up 40 contracts. Just open up what you normally open up and trade like it's real money, and try to make a challenge that I'm going to trade this AO to AO. I'm going to stick to the rules every single day, and they'll send message in the middle of the day. It's just tough. I mean, it's just mentally tough to do that. Absolutely, it is. No doubt
And that's
about
why
it.
we've taught continuation trades
Yes. So if you do
using
get
those
30,
other time frames.
if you get 30 points, 20, take it, and then
Right.
then wait to the next signal. If that's everybody's different, but yes.
Something
It's
Mark and I talked about, and I had this when I was seeing these results, the average points per trade for October, let's just round up, is 6. So if you took 6 points on every trade, then you're set to be on pace for this average without that heartache, that heartburn, and all of that. So there's different ways you can think about this, and it'll be nice when we have this performance up. And I would encourage all of you to do your own sort of testing and averages.
it's probably one of the best validations that trading is an emotional activity, no matter how you slice it. Everybody gets very emotional when it comes to their money, and we've said it time and time again. You owe it to yourself to get really comfortable with the AO to AO process, even if it is a variation of it, even if it's taking a profit after 10 points of profit or 20 points of profit, or using continuation trades, whatever variation it is, you can be extremely successful with it. You owe it to yourself to trade it in a simulated environment for 1, 2, or 3 months. Get yourself so conditioned. It's like muscle memory, it's muscle programming, it's programming your emotions. It is minimizing the emotions when you have a big drawdown, you have a loss for the day, and go, all right, well, it's just part of the average. It's just part of what makes up the overall average. I don't believe I have ever met a single trader who would be unhappy if they could make $1,400 a day or $1,000 a day off of a $500 risk per trade that gets recycled from trade to trade to trade. I don't know any trader who would be unhappy with that. So it's a matter now of you conditioning yourselves. We'll provide as much guidance and direction as we can. Michael is great about calling out signals and discussing them and why, and here's where you want to be a little cautious. Aaron, is there jumping in and helping out with that also. But we'll provide as much guidance and direction in the live trading room as we can. Other than that, you got to invest a little time in conditioning your own emotions and your own attitude towards this level of trading. So, Gadari, I want to address, I know you put a couple of messages out here. Really appreciate your thoughts on that. I'm going to wait until we close out the year to decide exactly how we want to move forward with the Freedom 5 program. Not sure yet. I'm sure some people would choose not to participate going forward, but we'll have to see how that plays out. But we'll certainly keep you posted on that and whether or not there would be any other type of alert service that would replace that. What I am seeing this year, and I wasn't anticipating this this year, but what I am seeing is that the delay in the alerts is a significant dynamic, more so than we've seen before. And the real-time services, particularly Profit Optimizer, where you can participate for 15 minutes, take a trade, literally looking over Michael's shoulder, listening as he takes the trade, as he opens the trade, and as he closes the trade. And then also in the live trading room where we take trades in real time. Those are the services that are really doing extremely well right now because they're very responsive, immediate, action can be taken by anybody and everybody who wants to take the trade. So just want to evaluate how the market performs for the rest of the year, and then we'll decide what we want to do with Freedom 5.
I'm not seeing any other questions out there.
Okay. Michael, you have any other thoughts?
No, sir.
Aaron?
Nope.
All right. Well, I just want to say to everybody, thank you very much for being here. I really appreciate it. I had some great discussions tonight, especially around the AO to AO, which is not futures specific. I want to be very clear about that, but it was taught in the futures trading course. It can be used to trade options and be very successful in terms of options trading. So I love the strategy, and I think it can serve many of you very well. Again, thank you for being here. Thanks for being part of our community of traders, and we'll be back at it tomorrow morning with Profit Optimizer. Thank you, Michael. Thank you, Aaron.
Thanks, guys. Bye-bye.
Thanks, Mark.
Good
Thanks, everyone.
night, everyone. Bye.